Let's talk about Tesla. Earnings day is here, and I want to give you some valuable tools so you can navigate through this day in the most optimal way possible. And before we get started, just a quick disclaimer: I hate getting dragged through the entire video just to get to the bottom line. I don't do that to other people. I value your time, and I don't do that shit. So here's what I'm going to do in this video, like always. I'm going to give you the bottom line in the beginning because I value your time. And if you want to stick around for my analysis, grab a beer or coffee wherever you're at in the world and join me. You're more than welcome. But if you leave, it's fine. Don't worry about it. So check this out. My name is Tom Nash, and I quit my corporate job as a senior financial analyst to break down companies for you. If there's one thing you need to know about me: I don't take bullshit from anybody.
If you think of any other automaker looking at electric technology, which they should be because it's the future, how are you going to catch up with Tesla? Because not only are their costs becoming cheaper, but they're cutting the prices of the cars. So really, how do you keep up on a price and performance basis?
Okay, so let's do this. So what's going to happen with Tesla? So first of all, let me just say something you all probably know if you are dealing with Tesla. The Wall Street analysts have been historically wrong about the Tesla earnings again and again, quarter after quarter. In fact, if you take a look at historical predictions, the Wall Street consensus has been wrong 80% of the time in the last 10 quarters, which is insane because pretty much a coin flip would have done a better job than these analysts at predicting the actual earnings of the company. Now, I'm here to actually give you my honest opinion, and my honest opinion is this is going to be a groundbreaking quarter for Tesla. Why? Well, here's the actual knock that people have on Tesla year after year, quarter after quarter. People come back and say, hey, Tesla is only operationally profitable because it has regulatory credits. And people keep throwing that at Tesla as if it matters. But let me explain something to you. This is going to be the first quarter that Tesla actually comes out and posts actual operating profits without regulatory credits. Let me tell you why I think that's what's going to happen. Because Tesla actually increased its deliveries in this quarter by 50%. It delivered 90,000 cars in the previous quarter. It delivered 135,000 cars this quarter, meaning there's a 50% increase in its deliveries. And as you know, Tesla is operating at 25% gross profit margin, meaning we're going to see a 25% over a 50% increase in the gross margin. And if you go back to the Q2 financials, you'll see something very interesting. You'll see that Tesla was on the cusp of operational profitability without regulatory credits, and they took about 400 million just to get over that threshold. This time, they won't need to because we're going to see an increase in gross profit to the level where Tesla is actually going to post an actual operational profitability without independently of any regulatory credits. And I think it's a huge move, especially given how much money the company invests in research and development and in CapEx. They're building multiple factories around the world. They're investing a lot of money into research and development, and they're still profitable.
Long-term visionary projects that Elon has outlined, he has fulfilled, faster than some expectations, in some instances slower. It depends on perspective, but he's fulfilled them and he's moving on. It seems like the battery one was another example here where they're far.
I'd say that more street analysts are catching up to the fact that Tesla's really the leader by far in electric vehicles. We think they're 3 to 4 years ahead of the competition at this point.
And the reason that this is so insane to me is because Tesla, for me, has always been this hybrid of a tech company and an automotive company. And in both these industries, the CapEx investments and the R&D investments are so huge, it's really hard to see profitability in early stages. Now, Tesla is not an early stage company, but they're still behaving like one. They're throwing everything back into the company for more development, more research and development, more CapEx. They're pretty much going back and putting in the money back into the company, which is genius. Pretty much what Amazon has been doing. And I think it's a smart move, going back on track. I don't know if Tesla are going to claim any credits or not in this quarter. I'm not a prophet, but maybe I am. Who knows? But what I can tell you is that their operational profit should be independent of credits positive, which is a huge, huge piece of news. Now, what's going to happen with the share price in the short term, I don't know. Historically speaking, there's been a lot of volatility around the earnings day. Lately, we've seen some negatives. In the past 2 quarters, there's been negative reactions around the trading day. However, if you zoom out to the last 4 quarters, you'll also find 2 very positive quarters. So it doesn't really matter. Besides, you should know by now that past performance doesn't guarantee anything. It's like going up to the roulette table and say, hey, this thing hit 0 just a second ago, it's probably not going to hit 0 again. No, it has the same odds of hitting 0 again and again. And if somebody thinks that they can predict the Tesla share price at the earnings day, they're lying to you because they can't. I would stay away from it because I think it's too volatile. What I would do is I would actually buy Tesla stock quite soon, because here's my reasoning. And I don't do day trading, so I don't give a shit about that stuff. So my advice to you is to stay away from the stock during the earnings day. It's too volatile, it's too unpredictable, and there's a lot of volatility which cannot be really explained or predicted. I don't like to work in this environment. What I would offer to you is to think about Tesla in the long term. Given what I just told you, given everything that's going on, I think Tesla right now is at rock bottom. If you take a look at their charts, you'll see that the fluctuations are really going upwards. If you pan out and look at the 90 days performance of the share, you'll see that despite the volatility, it keeps going up. Now, Tesla isn't a bubble like most people want you to think, especially in the mainstream media.
But, again, I think people look at the run up and if you're sort of concerned, like, does Tesla deserve this? Well, if you look at the rest of the auto industry, I would expect some of these companies are going to go out of business as we transition to electric and autonomous technology, because not every automaker is going to be successful. Certainly many of them are behind today. And we think this could be a more consolidated market in the future, particularly with autonomous taxis. We think there'll be geographic monopolies. So I think that, there is a lot of value out there to grab.
So what is my advice here? And before I give you my advice, just a quick disclaimer. This is just my opinion. It may be wrong, inaccurate. Do your own research, blah, blah, blah. Now, here's my opinion. I think the current share price of 420 is pretty much the rock bottom for this company. If you pan out to the last 90 days, you'll see that despite the insane volatility, the share keeps going up. And for a good reason. I think that at 420, the share price long-term will definitely go up. Now be careful. I don't know what's going to happen in the short term. I wouldn't speculate. But as a long-term investor, I think 420 is a great entry point right now into the company. If the share price goes lower to 410, it's definitely a no-brainer. Now, as always, thank you so much for our channel members, our patrons. You guys have been killing it. Your support means a lot to me. Thank you so much. You're the reason I'm doing this. You're the reason I'm able to do this. Thank you so much. We'll see you guys in the next video.